just really get a clear understanding of the market as far as technicals, fundamentals, but more so I stress a lot sentiment, okay? Sentiment, sentiment, sentiment. So I'm just gonna pull up something really quick. So guys, matter of fact, right before I go in there, any questions for me? Anything? Anything for me? I'll just check the chat. Okay, all right, cool. So you don't got any questions, that's fine. Don't even worry about that. That's straight. That's all right. All right, so as a matter of fact, let me explain something to you right now. I'm gonna pull this up two ways because we just had the Aussie news that comes out. So one thing I'm doing, all right. So I'm gonna start sharing my screen in 1 second. Give me a second. Can you guys see my screen now? Yes?
Yes, sir.
Okay, excellent. So
Yep,
good.
yep,
You can see all right, so this is first and foremost, this is like you can't ignore this calendar. If you're on my session or not, I mean, it doesn't really matter. This is something you cannot ignore. This is fundamental analysis and market sentiment. You cannot ignore this. Why? Because every time when there is some sort of impulsive movement and or impulsive reaction in the market, suddenly, not even just suddenly, it's planned. These are the reasons why. Okay, and today was a very big day, obviously, for the U.S. dollar. We had the FOMC statement, the federal funds rate. Um, even though they did raise it, that does not necessarily, but they raised interest rates, that the currency has to increase in value. That is not true. All right, you have to be aware of things that that we call how the central bank is feeling. Are they feeling dovish or are they feeling hawkish? So I want you to write down those two terms if you don't know what that means. Dovish means there is uncertainty, some sort of macroeconomical data is of concern, whether it be inflation or actual monetary. And the central bank's job is for them to combat that. How are they going to combat low inflation or hyperinflation? There's always going to be something that's not perfectly balanced, because if everything was perfectly balanced, then there'll be no need for government. You understand? There will be no need. So there's a few terms that I like to definitely stick by. So one I just gave you was inflation. Two, which I watch out for a lot. It's called QE, abbreviation for quantitative easing. All right, so you might want to write this down. Quantitative easing. Now, what is quantitative easing? Quantitative easing is basically when the federal government is forced, or the monetary, every respected country's monetary. I'm sorry. Yeah, London. Yup. How would one process all that? Yeah, I mean, listen. This is not for now. This is for long run. Cara knows what I mean. She understands what's about to go on. But for some of you who are very, very new to this, please just take the time to look up what these things mean. Go into a little more depth. I'm just introducing it to you and so forth. So I'm sorry. So monetary is like I said to you before, is when they're forced to step in and print money. Okay, so if any of you have any background history, banking or so forth, or anything like that, they're forced to step in and print money. Why? Why? Because when there's no money circulating in the economy, what does that do? It comes to a halt. All right? That comes to a halt. And therefore, inflation will start to get out of control. So you have to do something. You have to combat that. So that's basically how each respective local currency works in coordinates to, let's say, a mother currency. They have to adhere to that central bank's monetary. So that's a good way. That's a good thing to watch out for, because what that means when a specific currency, like let's say the yen, is going through quantitative easing, that means that the yen has been relatively weak quite some time, all year round throughout the charts. All right, so that's definitely two things you want to be aware of. So I'm going to pull up something right now. All right, and this is a chart, daily chart of the Aussie US dollar. Okay, so you see I have key levels here and so forth. Like I said, some people don't use them, but I like to. Why? Because I like to know where I'm at in the market on a higher time frame and so forth. All right. So we've actually was watching price action from abroad from a very while now. So this entire pullback. As a matter of fact, one thing I also want you to do before I move forward is make a habit to go up to the highest time frame, which is the month, to get a general stance of where price is, where price action is, just to get a feel of how what cycle is the market in, or is it in a downtrend, a bear trend? Obviously, this is a big bear trend. Pulled back. This was a pullback to that bear trend. And then obviously we're here now. So the market has found some support around the area. Now I'm not going to just talk to you about some little, ridiculous support and resistance. You can go to iML back office. I want to get down to some nitty gritty stuff. Okay. So when one watches this, hold on, let me just make a little adjustment. I'm sorry. When one is watching the monthly and the weekly time frame, I'm watching to see if I can identify a certain area. Obviously, this area, this is why key levels are so important. So some of you can have a screenshot. I'll dump this off in the chat so you can have that. So you can see clearly off key levels that I got a reaction from price. Okay? The market rejected up here once and twice. So look how long it took for price to get back over there. What was this, 2015? In May? So the last time price was back up in there was obviously September of this month. And what kind of reaction we got? We got to bounce off of that. All right, so let's watch this next key level. These are monthly levels now. Now, finally, when price obviously broke into this level and it made it back up to here, this is what, 7750. This was such a crucial level. We was paying attention. We watched this in class very thoroughly. So you can see right here. Once again, I'm going to zoom in a little further now for you. Look how it happens when price breaks through a certain area. All right? And every single time when you see a major move like this, it was caused by some sort of news, some sort of monetary figure that came out that was really negative for the currency. All right. So now, this is where Fibonacci comes into play. A lot of people get confused how to use Fibonacci properly. Fibonacci works best on the daily time frame. Anything like the week, even the weekly too. But anything that's the monthly, no, it's a lagging indicator. Monthly is very lagging. But you can use it definitely for daily and weekly. And I like the sweet spot, which is the 8 hour. All right, I like that sweet spot. So what I do now is, okay, I'm going to measure the entire cycle. All right, this entire cycle, this was a pull up. Let me show you how this thing works. All right. So you start from, let's say, the very bottom. Lex, how do I identify a very bottom? Tara can tell you, I always like to look for nice 3 pin bar setups. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. That's how a swing point is identified. Okay, when you have a nice 3 pin bar setup, usually there will be some form of evening stars or morning stars. That's usually what it comes down to. All right. So, okay. So I'm starting from this. Watch how this plays out now. Very good. And pay attention to 127. This is a very key area that you can use for take profit. I like to use it for take profits. So like I said, I'm going to measure this entire cycle. So from this swing low, this to that swing high, right? So from here all the way up to there. Let's take a closer look now. I'm going to zoom in. This is weekly. Where did price reverse at? See this golden ratio? This golden ratio, this 61% is so important. And mind you, I just want to set for the record, I could be a little vulgar here. The market can give two shits about your Fibonacci level. All right? Why do I stress it so much? Is because us as human beings, the market is emotionally driven. We make a big deal out of it. All right, you, the speculator, you're the ones that pump liquidity into the market. Don't forget that. Without us, all the money dries up. The bank has no money to play with. All right? What's up? I'm sorry. Yes, without us, the bank has no money to play with. So you are the reason that the market moves, not them, you. All right? Because when local banks are not circulating enough money, like I said, what does the central bank have to do? Hello, 2008, step in and bail people out. Quantitative easing now comes into play. They have to print money to put back into the economy. In return, does what? Weakens that currency. All right? So, like I said, because we make a big deal out of this, that's why it's here. But notice, look where this lands on. It lands on one of my monthly key levels, right? This was obviously a key level and so forth. This lands right on the monthly key level. So it's right there. You could not close above there. So mind you, where's my 127 now? My 127 is going to stay here as a target. That target was achieved, was it not? This is the weekly though, guys. Weekly. So when you spot turns on the weekly, that's the opportunity to ride a trend up. So therefore, you won't have to jump around to a million pairs. You could just steadily ride one pair up if you know that that pair is going to be now trending, having a turn in the other direction. That's what the good thing or the important thing about this is when to spot these key turning points and when will there be an opportunity that these key turning points will arrive. All right. So 127 target was achieved. Okay. All right, cool. So this is what I'm going to do now. So now that this was achieved and we topped out all the way up here. So all I'm going to do is take the fib. I'm just going to pull it up to here. Matter of fact, I want to put it right up to there. Then I'm going to take the bottom. And I'm going to put it up to here. Okay. So what happens now? So from this new swing point, swing low, swing high, this entire cycle, one leg, pullback. Another leg, this is very extreme pullback. But nonetheless, it's okay. It's a pullback. Notice, look where price action turned. This is at a 78% where the market found support. But let's take a look at the past. Look at my cross here. You see a few times where price pinged over here. At the wicks. Look at the charts. Let it tell you what's happening. Right? This is how you read the roadmap. Okay, so we traced all the way back from this move, all the way back down here. Now, what's going on now? This candle right here is totally engulfed. All right, but let's come down to a smaller time frame. Let's hit it there. Now, mind you, I got a little fancy here and so forth. So, all right, I know where the price turned around, so I don't need this anymore. It's not serving the purpose anymore. I don't need that right now. So during this whole time now, watch how I'm going to put this all together, right? This whole time. So we know 78 is here, but what do we have here? 1, 2, 3. 1, 2, 3. We have follow. Obviously, this is today's candle. What caused all of this price action? It started going up the London session, but what happened to the US dollar today? What happened to the US dollar today? What caused all of this? You saw the euro fly up to the sky, right? So basically everything against the US dollar went up, right? Pound US dollar, Kiwi US dollar, obviously the Aussie, which we're on now. This is what caused that. This. The market waited patiently all week to turn. That's what it waited for. It waited for that fundamental analysis. And if you were watching it live, if you were watching Janet Yellen speak, you could have saw that the market was waiting for certain key words. They needed to hear certain things. Oh, all they needed to hear was, yes, we are concerned about the low inflation. When I hear that, I push the button. Buy the euro. Sell the US dollar yen. Sell the US dollar Swiss franc. That's it. That's all I need to hear. we are overly concerned with inflation. All right, we're going to be replacing our monetary our monetary standards. Once you start hearing keywords of concerns, that is the green light to go. All right, that's the green light to go, because I sat there and I watched, and I said, okay, Yellen, come on, get to the point. I want to hear what you're concerned about, so that you can give me the confidence that I know this pattern is going to play out. I'll give you some extra boost. All right, so okay, that happened, and then you can see we found the very bottom. So you can see, obviously, when price breaks through certain levels and it has an issue breaking, when it breaks, makes a new low. Nice ABC pattern right here. Make a new low. On the way up, obviously, anything that was previous support will become a new resistance. So this acted as a very strong resistance area. So I said that price would get up here. You've been watching this. We actually rolled this quite a way up. Got most of this move. I think we've been in since here. I got all of this, all of this. And I said, watch for this area. Why? Because this was a troublesome area when price finally broke through there, retested once, retested twice. Hold on, give me 1 second. I just want to check that comment. Are your markups different on each time frame? It's top-down analysis. That's what I'm doing. Notice I went from the monthly and I worked my way down. So I just put it that I don't. Whenever I'm looking at the monthly or the weekly, I don't want too much. I just want it nice and clean and clear, so I can see the anatomy of the candlestick. So as I go down, that's when I get a little more creative. All right, you can see these areas that I've marked off. Obviously, this area is no longer, this star is no longer needed. Here is no longer needed. Why? Because price has moved accordingly. It's no longer needed. How do you not have all yellow boxes on the monthly or weekly? I don't. Well, that's personally on chance. Good question. I I don't really need them, right? And why don't I need them? Well, because I have.
How do you get them to not show up at all? Like how they're just
Oh,
not there? Is that a setting?
yes, you go to, that's more a trading view thing. You can set them to specific time frames. So I would go to the actual object. I would right click, format, and then go to visibility.
Oh my
See?
goodness. You just changed the game. That's amazing.
Yeah, so that your screen doesn't get cluttered. You don't want a
Oh,
million things going all over the place. Like, that's just how you want to do it. You know what I mean?
yeah,
You want to
thank
keep
you.
it nice and clean. All right. If one thing, a lot of folks will tell you, my charts are very clean up there on iML TV. They're extremely clean. I like to keep them very, very well structured. So as I'm following price, you understand what I'm saying? I'm just gauging the price to see where price action gave problems. All right. I can go on and on and on and on. But notice this is not stopping. I said, okay. I said, all right, we broke back up above the weekly. I said, okay, if we break up above the weekly, we're going to go test this area. Okay, if we test this area, go check the record and it's there. Then we're going to go say hello to this area. We break this area, then we're going to go ultimately back up to. So, I mean, listen, I'm no prophet, but I just know what the hell I see when I see on the charts. This is not going to stop. You can push the buy button right now. It won't have anything to worry about. It won't stop. That is too strong, too much of an impulsive move to just suddenly stop. The market can't just suddenly stop like that. It doesn't do that. It's never done that. And it never will do that. All right? So don't let anybody tell you anything different. When there's an impulsive price action like this, it will not stop. It won't stop. I didn't care if you bought here. I didn't care if you bought there. It won't stop. All right? So obviously now, if this is going up, here's another key thing, correlated pairs. Aussie US dollar, Euro Aussie can never move in the same direction. So if one is going up, the other one must be going down. And it is. They can never move in the same direction, ever. If they're moving in the same direction, that is a serious freaking problem. Okay? But it's not going to do that. So we're not worried about that. Why? Because they're anti-crosses against one another. So now back to the Aussie dollar. You can see this is two currencies simultaneously working together. This is weakness from the dollar and strength from the Aussie, which makes this a suitable pair to long in the process. I'm gonna give you a guide to follow, right? Listen to him. He's extremely intelligent. I've learned quite a few things from him as far as monetary goes. Write this name down. His name is John Keeklight. John Keeklight. Right? Him up. Follow him on Twitter. I mean, you really want to learn some fundamentals and monetary and doves and hawks and just a whole wealth of knowledge. That's where I got it from. And that's where you get it on iML TV. Yeah. I learned a lot from that guy. All right. So forth, quantitative easy. So just how to interpret certain data and that I know to stay out of the market at certain times until certain risk on events. Risk on. Meaning is the dollar is risk on event. So this is going to the moon. Great. So where's the next area where we're going to watch out for, guys? I think that's evidently clear right in front of your face. Is it not this area? Yes, it is. Now, will price probably pull back into this? If it gets here, where would I expect to pull back now? It's really, where would I expect to pull back? John Kicklighter. All right, John Kicklighter. Kicklighter. So we get up to here. And just like, you're going to start just seeing the patterns come. Why? There was a problem up here before. So I'm expecting us, if we get here, back to here, what now? Mind you, this is a rising trend line as I'm going. I'm not saying it has to do this, but you know, the market doesn't move in straight. Just imagine pattern will start playing out. We'll just start playing out on its own. One second. Okie dokie. All right, so yeah, they'll start playing out on its own. And then, how would I know that price is going to move there? All right, price is going to halt there. Well, it had a problem in the past, but I'm on the 4-hour time frame. Tyra knows, what is this? What is this? What formation is this? You should know this already, especially if you've been through iML back office. You should know that. Anyone? And if you don't, I suggest you go purchase a candlestick book. You must. That is an essential. Essential to. Don't know anything about candlesticks, you should not be trading. 3-candle formation, you can say 3-pin bar, but the proper term is an evening star. Evening star. I'm sorry. Evening star. All right, look it up. Let's okay, really quick. I think I do a lot of stuff. People, evening stars, Forex. Images. You see this? You must know what this is, especially when you see this on a higher time, like the 4-hour time frame and above. You must know what this is. See this? So let me ask you, does this look like that? Yes, it does. Especially if this is followed by a shooting star. So whenever you see that formation in the top of an uptrend, I know to go short, especially if price had bounced off this area before. 2 long wicks, right? You wait for this confirmation, go short, put your stop loss above the previous high. That's one hell of risk to reward. So you see how this works? What do? You see it here again. Remember, there's a lot of stories. These wicks tell a lot of stories. That means that there's enough, I'm saying, bulls in the market to overtake the bears and drive price back up. So if you see wicks around a certain key level, like the weekly, the daily, the monthly, that's a warning sign. All right, that is a warning sign. It's telling you, hey, this rally or this short is losing momentum. When I see two of these, I'm getting out for my shorts. That's it. There's chances are there's no more profit to be made. All right. The strong bear market, I'm going to wait for the correction to get back into the short. So let me just explain something a little quickly. When you start seeing harmonics with that stuff, I'm sorry, guys. So here's another thing. XABCD. That's my favorite. Gartley's, bats, whatever. I could care less. But is can you see them? And a lot of people have it misunderstood on how the harmonic scanner works. I'm not going to sit here and do a whole lesson on the harmonic scanner. That's an IML back office. But I am going to give to you how this works. All right. So whenever I'm in a nice move down, right, I can physically see this whole thing. That means it's too late. I'm not going to push the sell button here. I'm not going to do that. I'll probably scout my way down for a few. I'm not going to do that. So once this initial low was created, right? So moving forward in the future, I automatically draw a line. Okay, so if ever price comes back down here again, I know to expect something. It's either going to follow through and break or it's going to bounce. All right, so, okay. We can all agree that this is an X, A, B, C, D pattern. Let's say if he even came up here. Nice little Gartley, right? Now that works best in the correction of a downtrend. So what do I do again? Okay, what do I do? Well, I just come back to this trusted old tool once again. Now, a lot of people are confused where to draw the Fibonacci. All right, you draw Fibonacci where usually you have two preceding candles going up, down like this, 1, 2. Then you have the initial candle, and then two candles following through on the upside. All right, so you have 1, 2, 1, 2. This qualifies now for the sweep. All right, so two higher highs on this side, two lower lows on the right side. That qualifies for a sweep. All right, two higher highs, doji, two lower lows, swing point. All right. Okay, so same thing applies here. 1, 2. Shooting star doji. Well, obviously, that just made its way on down. So I take the fib and I come from there. And why? What else? What gave me confluence? Take a look, guys. Just scoot it on over just a little bit. You see, this served as a support area, a nice little bounce before it actually broke through. So this is obviously another key area when we get there. If we get there, that will also be another key. All right. Remember what I said. Each wick tells its story. So that's why when you see price, when it just retraced right back up to that very spot, you had to catch this now. You had to see this. Boom, and just epically failed right back again. So now that prices did that, I'm going to wait for this correction to end. Kara knows this very well. You've seen this. If you ever see this shape, that's a good time to get out of your trade. Because I promise you, 9 times out of 10, this is going to follow. All right, so let me show you that. Ever you see that shape or a variation of it, just going to section off this little piece right here. This entire piece right here. I'm going to section off this piece. Follow me carefully now. Maybe I should pick a lighter color. Yellow, yeah, that's better. 1, 2, 3, 4. Make sure you go through the Elliott wave section in your back office. 5. Oops. The 2 and the 4 will usually be equal as far as the corrections will go. These are just places for you to get back in. Why? Because I already went up to the monthly and weekly and I digested the information and said to myself, okay, the market is making low lows or highs. All dating all the way from back up to 8-1. Market has been making lower lows and lower highs, lower lows, lower highs. That's how you know when you're trending. When you're making lower lows, lower highs, higher low. There is a violation in structure. Like I said, let me not drift from my point. Does this not look like the same thing I just drew here? That is the same exact picture that I took. It's just slightly different. But I promise you, 9 times out of 10, you will see this. And when I do this inversely now, I see this. Does this usually mean? Am I going to buy it right there? Absolutely not. No way. Yeah, okay, less than 2 minutes. I'm sorry. So, the most important thing, yeah, I'm sorry, I just got a little carried away. The most important thing, guys, is to help you. Definitely, if you can do this in my sessions, I go over all of this information. I have it readily each and every single day. You just follow the trends, all right? You can see different variations of that. That's when you know whenever you get that shape that that's an opportunity. All right. But I'm sorry guys that we have to cut it short, but listen, like I said, tune in, you're gonna get a wealth of knowledge. This is just it's a lot, it's overwhelming, but you know, just thank you guys so much for having me. All right. Let's get it.
Thank you so much for being here, bro. Like super grateful for you, bro.
All right. No problem. Have a good one, guys.
Bye, guys.
See you in 12 hours.
Yeah. Okay, gotcha.